Futures climbing higher after April's inflation print comes in line with expectations, and we're taking a deeper dive into three sectors that have been hit by sticky inflation: food, shelter, and transportation. And we've got team coverage to break it all down with Yahoo Finance's Brooke DiPalma, Madison Mills, and Jennifer Schonberger standing by. Brooke, let's start with you here in studio. You're watching food as consumers are continuing to monitor grocery prices here.
Yeah, that's right. Americans are still feeling the impact of those higher food prices in April. They still felt it in April, rather. Overall food prices jumped 2.2% last month, but was unchanged compared to the month before. Now, the cost of groceries alone increased 1.1% compared to a year ago, but did see a slight decrease compared to the month prior, down 0.2%. Now, some of the ingredients that saw the highest jump in inflation last month include flour and prepared mixes, up 3.2%. Lettuce up 2.3%, and butter up 4.3%. Now, this report comes as a group of 40 lawmakers led by Senator Elizabeth Warren did call on President Joe Biden to investigate grocery store chains for price manipulation. Now, in the letter, she urged the president to take action to lower food costs. And what drove overall food prices last month was really actually not just grocery prices, but what we saw of food away from home. Labor inflation and higher commodity costs did continue to persist. The cost to dine out at restaurants jumped last month, up 4.1% year over year and up 0.3% month over month. And we've heard from companies like McDonald's and Starbucks, they're starting to feel consumers push back because of these higher prices. Both those companies posted sales growth that missed Wall Street's expectations. Another sector, I know, Maddie, you're watching, shelter, that contributes to just over a third of the CPI print. I know Main Street and Wall Street are watching out for that. Maddie, what did you see in the report?
That's exactly right, Brooke. It's really interesting because we're seeing that 70% of this print can come down to the contributions that we saw from just shelter and gas. So taking a look at some of the headline numbers that we got from that particular part of this index, shelter up 0.4%. We've seen that over the past 3 months now, so just in line with what we've been seeing. But that brings the year over year contribution of shelter up to 5.5%. Previously, we were at 5.7%, so we are seeing a little bit of progress there. The shelter picture of inflation becoming increasingly important as a gauge of whether or not the Federal Reserve's rate hike cycle is having an impact on the current state of inflation, particularly when you consider that shelter alone contributes to 50% of the overall CPI picture, and it's about a 36% weighting in the CPI. So when you are looking at what the Federal Reserve looks at, they're able to take out some of that data, including owner's equivalent rent, for example. So that picture, the super core number that we look at a little bit better when it comes to looking at the progress the Federal Reserve has had. But Jen, I know that you're watching transportation and services costs. What are you seeing there?
Hey, Manny. Yeah, that's right. Transportation costs still adding quite a bit in this last report, up 0.9% month over month, so a little bit better than the month before, which was up 1.5%. If we look at that year over year, it was up 11%. But I really want to call attention to services because that is something that the Fed looks at closely when they look at the different components of inflation. And that clocked in at 5.3% for the month of April, holding the same level as March. So on its face, you could think, oh, well, services is still looking sticky. That's not great for the Fed. But if we take a step back and sort of look at the glass half full, you'll see that, okay, fine, it's at 5.3%, but it's holding at 5.3%. If you look back at the beginning of the year, it started at 4.9% in January, going up to 5.3%. We saw sticky inflation for the first quarter, so perhaps maybe it's leveling off before it begins to turn down again. Of course, we will need to see more months of this to see if that is indeed the case. If you look at services excluding shelter, that looks a little bit better at 4.9%. Overall, this report looking good for the Fed. Is it enough to change the calculus at this point? No, I don't think so. Shauna?
All right, Jen, Brooke, and Madison, thanks so much to all three of you for breaking down what we have seen in different parts of this report.